When we look at the market, Tayo, we see a structural imbalance between the demand for Bitcoin and the available supply. We know the Bitcoin network only produces 165,000 Bitcoin per year. That's the full supply. And we see demand from ETFs, which are pulling in hundreds of thousands of Bitcoin per year. Corporations, as we discussed, also purchasing hundreds of thousands of Bitcoin, and governments purchasing, in our view, hundreds of thousands of Bitcoin. As this structural demand supply imbalance plays out in the market, it's exhausting the available supply. We think we're close to breaking out to new all-time highs. And when we do, we think, the market could run all the way up to 200,000.
Bitcoin is entering a new and critical phase in its market cycle, one defined by structural demand, tightening supply, and a macroeconomic environment that increasingly favors hard assets. Since the approval of spot Bitcoin ETFs in January 2024, the flow of institutional capital into the space has surged. Assets under management for these products have climbed rapidly, with billions pouring into ETF vehicles in just months. At the same time, the supply side remains fixed and increasingly constrained. With only 165,000 new Bitcoin mined annually, the imbalance between new supply and investor demand is intensifying. This imbalance is at the core of Bitwise CIO Matt Hougan's bullish outlook. In his recent interview with CNBC, Hougan reaffirmed his view that Bitcoin could reach $200,000 by the end of this year. His thesis is built on more than just short-term momentum. It's rooted in a broader transformation in how corporations, institutions, and even governments view Bitcoin. With public companies like MicroStrategy, Tesla, and now GameStop adding Bitcoin to their balance sheets, and sovereign entities signaling increased interest, the narrative has shifted from speculation to strategic reserve accumulation. Compounding this bullish backdrop is the shifting regulatory landscape. Hougan points to the recent bipartisan progress on the Genius Act, a bill focused on stablecoin regulation, as one of the most significant developments in crypto's regulatory history. He argues that a clear legal foundation is not only necessary, but inevitable if crypto is to grow from a $3 trillion to a $30 trillion asset class. Regulatory clarity could unlock a sustained multi-year bull market, paving the way for broader institutional adoption and further legitimizing crypto's role within traditional finance. The macroeconomic climate adds further tailwinds. With record levels of global debt issuance, persistent inflation concerns, and growing skepticism toward fiat currencies, particularly the US dollar, Bitcoin is increasingly being viewed as a hedge against monetary debasement. This convergence of supply constraints, institutional interest, corporate adoption, and a favorable regulatory shift forms the foundation of Hougan's ultra-bullish thesis. According to him, the setup for Bitcoin has never looked better. As we bring you clips from his interview, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more insightful analysis from the industry's brightest minds. Thanks, and enjoy the video.
One of the things about GameStop and one of the things about crypto that we know more than anything else is that they're volatile. GameStop is a famously volatile stock, and of course, crypto itself tends to be volatile over time. The beauty of covered call strategies is that they translate that volatility into income. We've seen success already at Bitwise doing covered call strategies on stocks like Strategy, like Coinbase and others. And we thought, why not apply that to GameStop as well? It's a way for people who are excited about being long GameStop to maintain that long bias, but also generate really substantial income by translating that volatility into dollars in their pocket. We think this is a megatrend, by the way, that's going to accelerate into the future. One, of course, is increased worries about the dollar. Corporations globally are sitting on records amount of cash, and what they've historically done is park it in short-term US treasuries or, in fact, in cash accounts. But with the huge money printing and growing deficits, that no longer seems like a valid approach. They need another way to protect their wealth from degradation, and they're turning to the best horse in that race, which is Bitcoin. Beyond that, the investing audience has just recognized that this is a positive strategy. And so companies are being rewarded for taking this bold step of putting Bitcoin on their balance sheet. We think there will ultimately be thousands of companies that do this. We think we're in inning 1 or 2 of this megatrend period, but you're seeing it accelerate over time. It's very exciting. For crypto to really reshape how the world's global finance works, which is the market we're going after. That's how crypto goes from $3 trillion to a $30 trillion market. We have to be at the center of how global finance works. We need to rest on a strong foundation. Right now, crypto regulation in the US, which is the world's economic center for better or worse, rests on executive orders and legal interpretations. There's no laws that protect it for the long term. If we look back at the history of technology, we've seen major laws set the standard that allowed for technologies like the internet to grow and dominate the market. We need the same thing in crypto. And the fact that we made it through the Senate, at least onto the floor, we passed the most difficult hurdle, tells me that we're going to get there. If we do get there, I think we're looking at the longest and most sustained bull market that crypto has seen. I think it takes us up a major leg in terms of what crypto can do. I'm still optimistic that we'll see stablecoin regulation in the US. It has bipartisan support, and more than anything, the US government actually needs it to pass in order to continue to fund the government. Remember, stablecoins have become a major purchaser of US treasuries, and the government is on pace to issue more and more treasuries, more and more debt. So I think smarter heads will prevail. I think we'll get this through the Senate. I think we'll get it through the House. I think it will be signed by the president. And again, I think that will set the stage for a major bull market in crypto that could extend for multiple years.
Bitcoin appears to be entering a prolonged bull market, not merely a short-lived rally. Macro strategist Raoul projects that this cycle might extend well into 2026, based on his assessment of global liquidity trends and business cycle dynamics. He observes that once the ISM Manufacturing Index began recovering after languishing below 50, it signaled a delayed acceleration in risk assets, including Bitcoin. This banana zone, as he terms it, started in early 2025, and Powell expects major price momentum throughout the rest of the year into 2026. Meanwhile, on-chain and technical analyst Plan B, creator of the stock-to-flow model, underscores Bitcoin's scarcity as a structural driver of sustained gains. He notes that a sustained relative strength index, RSI, above 80, observed in previous bull markets, suggests that this cycle is still in its early stages. Based on his stock-to-flow model framework, Plan B projects continued price appreciation, with interim targets near $160,000 by end 2025 and potentially up to $400,000 later in the cycle. These perspectives highlight a critical inflection. This is not a gold rush-style speculative frenzy, but a deliberate and sustained expansion driven by macroeconomic forces and structural adoption. The combination of rising institutional allocation, record low exchange balances, and rebalancing across diversified portfolios signals a maturity in the market rarely seen in earlier cycles. Traditional stock-to-flow models, coupled with modern sentiment and on-chain metrics, reinforce the thesis of an extended rally, not a fleeting burst. Let's get back to Hougan's CNBC interview.
When we look at the market, Tayo, we see a structural imbalance between the demand for Bitcoin and the available supply. We know the Bitcoin network only produces 165,000 Bitcoin per year. That's the full supply. And we see demand from ETFs, which are pulling in hundreds of thousands of Bitcoin per year. Corporations, as we discussed, also purchasing hundreds of thousands of Bitcoin, and governments purchasing, in our view, hundreds of thousands of Bitcoin. As this structural demand supply imbalance plays out in the market, it's exhausting the available supply. We think we're close to breaking out to do all-time highs. And when we do, we think, the market could run all the way up to 200,000. It would help if the US government announced net new purchases of Bitcoin for its US strategic reserve. It will help if we get passage of the Genius Act and maybe market structure regulation in the US. But even if those things don't happen, we think the demand from institutional investors and corporations and governments around the world are enough to lift this market much higher. It is just a fantastic setup for Bitcoin right now, with worries about the dollar, growing institutional demand. I think it's going to be a fantastic second half of the year.
You compared 4 portfolios with different allocations, one without Bitcoin at all, and the others with either a 5% or 10% allocation. What was your big takeaway from comparing those different portfolios?
Yeah, I think they're really two. The first is just because Bitcoin is volatile, when you add it to a portfolio mix, it doesn't increase the volatility of the portfolio overall because it's not correlated with stocks and bonds, right? That's the famous free lunch of investing. When you add a non-correlated asset, it can improve your risk-adjusted returns without increasing your volatility. But the other point I was making is something that I find when I talk to crypto native investors, which is that they tend to have very large allocations to crypto. And you might think that would increase the volatility of their portfolio, but they offset that by making the rest of their portfolio more conservative. Because they're taking a big bet on crypto, they don't need to take as big a bet on equities or on bonds. They can hold a significant amount of cash. And I think if you play with the ratio between the stocks, crypto, and low risk bonds in your portfolio, you can create some really exciting returns, really dynamic portfolios. The old days of having 60% stocks and 40% bonds, I think those are over. I think people need to move to a new kind of portfolio that looks at stocks, cash, and crypto and modulates the risk between them to get the kind of risk adjusted returns that they're looking for.
Do you think we'll see investment vehicles tied to these altcoins in the US this year, especially amid the backdrop of a more crypto-friendly SEC with Paul Atkins at the helm?
Yeah, as you mentioned, I can't speak to our specific filings, but I can say that I think the SEC is moving in the right direction. If you look at what's happened since we launched Bitcoin and Ethereum ETFs, all they've done is that they've lowered the cost for investors and increased the security, right? We've dramatically reduced costs. We've dramatically improved security. They've been a net win for investors. What that tells me is that we can go further down the spectrum to these other alternative assets that people want exposure to, that they're currently buying exposure through centralized exchanges, which may have high fees and security risk. Why not allow them to access it in a safe, secure, low-cost ETP format? There's no guarantee that we will get there, but if we're reading the tea leaves, we're very optimistic on many of these alternative assets. Not every crypto asset needs an ETP or should get an ETP, but we think investors want and should get exposure to more assets than just Bitcoin and ETH. And I do think we're going to get there towards the end of the year. The SEC is very constructive. They're open to discussion. It's a breath of fresh air, and we're really enjoying it here at Bitwise.
Matt Hougan's $200,000 price target for Bitcoin may seem aggressive to some, but it's far from an outlier in today's market sentiment. His conviction stems from hard numbers. While Bitcoin ETF inflows have averaged billions monthly, new supply remains tightly capped post-halving. The simple math, as Hougan puts it, suggests demand outstripping supply by a factor of 10. This imbalance alone, he argues, could send prices soaring before year-end, especially if even a modest fraction of global wealth reallocates into Bitcoin. He's not alone in this view. Standard Chartered recently reiterated its own $200,000 Bitcoin projection, citing ETF-driven demand and institutional portfolio integration. Fidelity Digital Assets has emphasized a similar long-term outlook, highlighting Bitcoin's strengthening role as a non-sovereign monetary asset in an era of fiscal and geopolitical instability. Even independent analysts like Willy Woo and Plan B are identifying on-chain signals and cycle metrics consistent with explosive upside, ranging from 150,000 to 250,000 by late 2025. What makes these predictions more credible today is the structural shift in market composition. Unlike previous cycles, this rally isn't being driven by retail euphoria or leverage-fueled speculation. Instead, it's driven by slow, steady, and sustained institutional demand. Pension funds, asset managers, RIAs, all allocating based on long-term theses, not meme-driven momentum. These actors don't chase tops. They build positions over quarters and years. As Hougan explains, Bitcoin's emerging role as a core portfolio asset changes everything. When a few thousand RIAs start recommending it, or a handful of sovereign funds decide to allocate, the available float simply won't be enough to satisfy demand. That's the structural tailwind pushing his forecast. Not hype, but capital flows backed by policy shifts, economic rationale, and a maturing market infrastructure. The smartest minds in the space are calling for a multi-year bull run for Bitcoin and other digital assets. Do you agree with their predictions, or do you think the cycle's top is in already? Please drop your thoughts, comments, and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks for watching.